I used to run a gold desk at JP Morgan during 08, 09, so it was a good education. But what I would say is gold tends to do best at the tails, not just rising inflation, but inflation that is rising faster than expectations. Gold tends to be a strong, consistent outperformer in those situations. So when we talked about inflation earlier, if your personal view is that's a risk, that's a reason you might want to own some. The other time it does well is when we're in a shock that is recessionary, and gold is seen as a safe haven asset. But what's been happening in the last year or so, in addition to those tails historically that have been the best scenarios, is we're seeing central bank reserve diversification, particularly from places like China and other emerging markets, who want to slowly get out of their dependency on U.S. treasuries and U.S. assets. And I think that's a structural trend that's not going to necessarily end this year or next year. And so even if gold doesn't have the almost 30% return it did last year, I think it's still on track to have a nice positive return this year. And again, if we're a little nervous about bonds, gold doesn't have the liquidity. It does have higher volatility, so you need to size the position appropriately. But having a small, I think, structural position of gold in a portfolio as a diversifier can make sense.